In today's video, we're going to be focusing on what's going on in the market. Is it all over? Is the bear market on the cusp of occurring, or are we still maintaining bullish market structure? Let's dive into all of that in a lot of detail. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. When it comes to the 21-week exponential moving average, this has been the dictating element, technical element that has been holding price above and in a technical uptrend dating back to mid-April of this year, and price has been effectively holding above here, rebounding from then, holding and stabilizing support around that region, even sometimes downside wicking, but never truly losing that level as a support. And that is a really important bullish technical market indicator in association with this technical uptrend line. And we've had a very decent reaction a few days ago, and now we're pulling back once again. But there's a possibility here that we're going to be holding at a higher low, and that higher low also happens to be at this 108k region, which represents the general range low. So if we're thinking about price within a macro range here, we have the range low at around 108, and this is the old all-time high weekly resistance here, which brings that range to 123.5. But at the same time, we have pretty strong resistance at around 118.5, and this is a historical supply zone which we comfortably broke beyond. But the problem here is that we failed to retest that, and of course we had a bit of help here where that retest was a failure due to tariff news and everything that's going on in that regard. But this lower high here was briefly invalidated, but now we have a higher high here. But at the same time, this region of resistance never really turned into support, and that's a region that we need to turn into support to get back into 123. But of course, at the same time, it's more important to develop support at higher levels, because going forward, if we think about horizontals in this regard, where we have the macro range low and we have this major supply region which we deviated beyond very briefly and failed to retest, then thinking about things as this range then gives us a more balanced view of which key levels to be watching out more in the short term. And definitely it's most important when it comes to 114. 114 is roughly the pivot point for price action, because we've seen price reverse from here towards the upside, and we've seen a failed retest back here, but generally breaking beyond and holding that level as a support more in the short term is what has historically enabled price to rally to at least 119 and even beyond there. So holding this level as a support is pretty important more in over the course of this week. But we've seen this weekly candle actually weekly close above here, so technically, if we're thinking about it as this being a retesting event and a successful retest here in the same way as we retested this level back here, then price could end up as another downside wick and weekly close above 114 by the end of the week, and we'd see two downside wicks here, this one being the longest one and this one being a shorter one, and then we effectively curl up from here and build out a base around 114, because 114 has to hold as a support to break us into the upper portion of this overall range. If we're thinking about this as the range low and the range high, and this being roughly the mid-range, turning the 114k region into support allows price to occupy the upper portion of that range. So we have that 114k level here, which is an important pivot point. But at the same time, we have this level here, this rebounding zone here, which price is slinking below for the time being, but is also trying to find support around there. So that gives us this sort of historical demand area around the mid-range region. And this entire pullback overall has been generated from a very key trend line here, and we've been seeing weakening rejections here, most notably when we compare to the 29% pullback starting in late 2024 and ending in mid-April also. And that shallowing has continued, it has persisted, but this shallowing here is a little less evident right over here compared to this pullback. And so we're seeing a delicacy here, a slight delicate shallowing in some way here, where this is only slightly shallower, and going forward we're going to have to maintain 114 and definitely at least 108 here to not just maintain that higher low that we see, because we are seeing still higher lows in the price action, but to maintain the perspective that that resistance is weakening over time. And this resistance is also a pretty important pivot point for price, because breaking beyond here would extend the cycle to a certain significant extent, because price would need to gallop and explore higher prices beyond 130.5k roughly speaking, and so that would extend the cycle a little bit more as a result, simply because there is no resistance beyond that point. So I think this is a key pivotal resistance that is going to enable the lengthening in a cycle, and a bit more of a lengthening than perhaps we have at this moment in time, because breaking beyond this resistance would enable additional upside. But until we've broken that resistance, then technically that's going to be the resistance for that cycle. And it is a progressive dynamic resistance, so over time it's going to be climbing. At this point in time it's around 130.5 or so, somewhere in that region. But going forward, pretty important to break that region if we want to see upside. And to resolve this general range, we'd need to maintain the higher low, or at the very least maintain the range low, because at the end of the day we're just moving sideways in terms of this macro monthly range here. On the higher time frames we're just consolidating between 107 to 116. This is the monthly range, because we were talking more about the weekly ranges, but this is generally the monthly range that it comes down to, and we've been upside wicking beyond that point quite a lot. And this level, generally speaking, is the region that we're trying to tap for supply, absorb those sellers. And what's pretty interesting about how we're treating the general range low here is that we haven't seen much volatility at this range low for 3 months, really, because if you look back, we've seen a lot of downside volatility in the monthly candles, and we haven't really seen that over the past 3 months. So it's quite good to see that we're seeing this downside wick right now. We're seeing strong aggressive buyback in this downside wick that we have had to downside pull back a little bit more, but generally we're maintaining the range low as a support. We're absorbing liquidity on the sell side here without generating a loss in this macro range. In fact, we're still just consolidating in here. So it's pretty important to just maintain this macro range going forward, and at the same time maintain the higher low that's been supporting this price action. And that higher low is pretty confluent with the bull market 21-week exponential moving average here. This is generally that support region that is approximately confluent with that higher low. It's approximately also confluent with this previous resistance here, which turned into support, then held as a support, and is still holding as a support, even if we deviated briefly to absorb some buy-side liquidity here to maintain and return back into the range. So we are holding that old region of resistance as a support, and we're doing so at a higher low, and we're doing that also at the bull market 21-week EMA here. So at the end of the day, we're still consolidating in a sideways fashion, but doing so in a way where premium buying is still evident to a certain extent in this higher low price action that we see here. And it's really important in these sort of really volatile times, not just volatile for price action, but really also emotionally volatile, to have access to this sort of unbiased, data-driven research that doesn't really want to impose a bullish, euphoric bullish perspective, or even a doom and gloom bearish perspective. It's just about seeing what the price action is doing, and at the moment we're just holding that support. So if you would like to have access to level-headed insights, of course subscribe to the channel, but at the same time feel free to book in a call with me or a member of my team where we can actually help out and work together on navigating this market together and making the most of the opportunities within it when it comes to Bitcoin or also altcoins, because it's not really easy navigating the market alone in a silo with a lot of noise and many people just calling for new all-time highs and then calling for new bear markets. Whereas what we do here is we navigate the markets using data-driven insights, and we look into things in a level-headed manner and try to stay grounded and data-driven at all times. So if you'd like to book in a call, click in the link in the description down below. The last time we were taking calls was quite a few months ago. We took them really for just a week or two, and then it was, until now that we're considering taking calls once again. So feel free to book in a call, and I'll speak to you then. Speak to you soon.